In a stunning turn of events that has sent ripples through the Shiba Inu community, the latest burn data reveals an almost unbelievable figure, less than one full token removed from circulation. This anomaly, a stark contrast to the millions and billions typically incinerated, raises critical questions about the efficacy of the burn mechanism and the future of Shiba Inu's deflationary aspirations. Is this a momentary glitch or a troubling sign for the meme coin's long-term strategy? The crypto world watches closely. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you wanted to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The concept of token burning has long been a cornerstone of Shiba Inu's economic model, designed to reduce its vast circulating supply and, theoretically, increase its value through scarcity. Historically, the Shiba Inu ecosystem has seen significant burn events, with millions, and at times billions of tokens being permanently removed from circulation. This strategy gained considerable traction, particularly with the introduction of Shibarium, the Layer 2 blockchain, which was anticipated to automate and accelerate burn rates through transaction fees. The community has consistently rallied behind these efforts, viewing them as crucial for Shiba Inu's journey towards sustained price appreciation. The recent New Year period, for instance, witnessed a dramatic surge in burn activity, setting a precedent for high expectations. It is against this backdrop of ambitious deflationary goals that the latest burn report emerges, casting a shadow of doubt over recent progress. On January 9, 2026, the Shiba Inu community was met with an astonishing and perplexing update from the Shibburn data tracker, a reported burn of less than one full Shiba Inu token. This minuscule figure stands in stark opposition to the typical burn events that often see millions or even billions of tokens removed from circulation. The report quickly became a point of contention and even ridicule across social media platforms, as it highlighted an unprecedented level of inactivity within the burn mechanism. While technically a burn did occur, its negligible quantity has sparked widespread concern regarding the current state and effectiveness of the token destruction process. This event serves as a dramatic illustration of the extreme fluctuations in burn activity, particularly when contrasted with the massive 10,731% surge observed on January 1st, 2026, which saw over 173 million tokens incinerated in a single day. Sudden and drastic reduction to less than one token underscores a critical bottleneck or a severe lull in the automated or manual burn processes. The market's reaction to the news of an almost non-existent burn rate has been notably complex, showcasing a divergence between immediate sentiment and price action. While the community expressed significant concern and even ridicule over the reported burn of less than one token, the price of Shiba Inu demonstrated a surprising resilience. According to reports, Shiba Inu was trading around 865 to 870 units on January 9th, 2026. Interestingly, despite the collapsing burn rate, the price had, in some recent windows, even managed to climb by approximately 9%. This paradoxical movement suggests that other market forces, such as broader market sentiment or whale activity, might be exerting a more immediate influence on price than the daily burn figures. However, the sentiment within the community is visibly divided. While some focus on the price's unexpected strength, others view the negligible burn as a significant setback, questioning the long-term viability of the deflationary model and the utility-driven burns promised by the Shibarium ecosystem. This dichotomy highlights the ongoing struggle between fundamental tokenomics and speculative market dynamics. Delving deeper into the on-chain evidence reveals a broader trend of declining burn activity leading up to the reported anomaly. Data from Shibburn indicates a significant weekly collapse in the burn rate, plummeting by approximately 82.12% over the past 7 days, leading up to January 8th to 9th, 2026. Furthermore, the 24-hour burn rate experienced an additional drop of approximately 12.73%. This sustained downturn resulted in a weekly total of only 34,819,938 tokens burned, a stark contrast to the robust figures observed earlier in the month. Expert commentary surrounding the recent burn data highlights a critical juncture for Shiba Inu's tokenomics. Analysts note that while the concept of token burning is fundamentally sound for creating scarcity, its effectiveness is directly tied to the volume and consistency of tokens removed from circulation. The reported burn of less than one token, following a dramatic weekly decline, signals a potential disconnect between the ecosystem's utility and its intended deflationary impact. According to reports, the initial surge in burn rates at the beginning of January was largely driven by increased activity on Shibarium, the Layer 2 solution. However, the subsequent collapse suggests that either the utility on Shibarium has waned or the mechanisms designed to channel transaction fees into burns are not operating at optimal levels. This situation presents a paradox. The price of Shiba Inu has shown unexpected resilience, even rising in some instances, despite the significant drop in burn rates. This divergence suggests that short-term price action may be more influenced by broader market sentiment, speculative trading, or whale movements rather than the immediate impact of token burns. The long-term implications, however, are more concerning. If the burn mechanism fails to consistently remove a substantial number of tokens, the deflationary narrative, which is a key driver of investor interest, could weaken. Analysts emphasize that for Shiba Inu to achieve its long-term price targets, a robust and sustained burn rate, ideally automated through ecosystem utility, is paramount. The current data prompts a re-evaluation of the burn strategy and its integration with the broader Shiba Inu ecosystem. The Shiba Inu community, known for its fervent support and active engagement, has reacted to the latest burn data with a mixture of disappointment, concern, and a degree of skepticism. Discussions across social media platforms, including X, formerly Twitter, and Reddit, reveal a clear division in sentiment. Many community members expressed frustration and even ridicule over the reported burn of less than one token, viewing it as a significant failure of the ecosystem's promised utility-driven burns. There are growing questions about the effectiveness of Shibarium in consistently contributing to the burn mechanism, with some members openly debating whether the Layer 2 solution is delivering on its deflationary promises. Conversely, a segment of the community remains optimistic, pointing to the price's resilience despite the low burn rates as a sign of underlying strength. This group often emphasizes other aspects of the Shiba Inu ecosystem, such as ongoing development and community building, as more critical drivers of long-term value. However, the overall sentiment indicates a need for greater transparency and more consistent burn figures to reassure investors. Developer hints and official announcements regarding improvements to the burn mechanism or increased utility on Shibarium are now more eagerly awaited than ever, as the community seeks clarity and renewed confidence in Shiba Inu's deflationary future. The forecast for Shiba Inu, in light of the recent burn data, suggests a period of heightened volatility and critical evaluation. In the short term, over the next month, the market is likely to remain sensitive to burn rate updates and any official communications regarding the burn mechanism. The reported burn of less than one token, while an extreme outlier, has highlighted a vulnerability in the ecosystem's deflationary narrative. Analysts predict that if consistent and substantial burns do not resume, Shiba Inu could face increased selling pressure as investor confidence in its scarcity model wanes. The price, currently trading around 865 to 870 units, may struggle to maintain its recent gains without a clear catalyst for renewed burn activity. This period will be a crucial test for the ecosystem's ability to adapt and reinforce its tokenomics. For the long term extending over the next 3 years, the outlook is heavily dependent on the successful implementation and scaling of Shibarium's automated burn mechanism. If the utility generated by Shibarium can consistently translate into significant token burns, the deflationary narrative could be revitalized, potentially leading to sustained price appreciation. However, if the current low burn rates persist, the long-term growth potential of Shiba Inu could be significantly hampered. Some analysts still maintain a bullish long-term view, citing the cumulative burns and ongoing ecosystem developments, but acknowledge that the burn mechanism needs to demonstrate consistent effectiveness. The path to achieving a true supply shock and significant value appreciation hinges on addressing the inconsistencies in the burn rate and ensuring that ecosystem utility directly contributes to token destruction. The recent burn data, particularly the report of less than one Shiba Inu token burned, underscores several significant risks for investors. Firstly, the inconsistency and dramatic decline in burn rates directly challenge the core deflationary narrative that has been a major draw for Shiba Inu. If the burn mechanism proves unreliable or insufficient in consistently reducing the circulating supply, the long-term value proposition based on scarcity could be severely undermined. This could lead to a loss of investor confidence and a shift in capital to other assets with more robust tokenomics. Secondly, the divergence between a collapsing burn rate and a resilient price action, while seemingly positive in the short term, introduces an element of uncertainty. It suggests that price movements might be driven more by speculative sentiment or external factors rather than fundamental ecosystem developments. This makes Shiba Inu a high-risk speculative play, especially in Q1 2026, as highlighted by some analysts. Investors must be prepared for significant volatility, as market sentiment can shift rapidly in response to burn data, community reactions, or broader crypto market trends. Furthermore, the reliance on Shibarium for automated burns means that any issues or delays in its adoption or functionality could directly impact the burn rate and, consequently, investor perception. A thorough understanding of these risks and a cautious investment approach are essential for anyone considering exposure to Shiba Inu. The saga of Shiba Inu's burn mechanism has taken an unexpected turn, with less than one token burned sparking debate and concern. This moment of extreme inactivity forces a re-evaluation of its deflationary path. Will the community and developers find a way to reignite the flames of scarcity? Or will this anomaly mark a shift in its trajectory? The journey of Shiba Inu is never dull, a testament to its vibrant community and the unpredictable nature of digital assets. Stay informed, stay critical, and remember, in crypto, every data point tells a story. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.